The following is a presentation of TFNN.
We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I need sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go to a Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally and then they tanked the market, and then I didn't know whether to reshort at the close, and then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos.
That's great.
Kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again, so,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 31st. How about that, folks? Already done with July. The July 31st wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call the dynamics of growth and change. You know, the only way life gets better for us is when we get better at life. Better is not something we wish for. Better is something we become. So here's our choice. Either 1, become part of what we could be, or 2, do enough to just simply get by, or number 3, become all that we can be. My choice is to become all that I can be. I hope that's your choice as well, because in the end, when the record book that each of us create is finished, let it show our wins and losses, but let's not let it show that we didn't try, that we didn't take action, and of course you know what's coming next, that we didn't take massive action out there. We must always remember that no matter how much we prepare for one turn of fate, something will sneak up when we're least expecting it. You know, just as Inspector Clouseau, Peter Sellers, used to say in the movie The Pink Panther, when you least expect it, expect it. In fact, this is the key to trading the markets. It's one of the reasons, most certainly the reason, that we use stops out there. It's the reason we look at both sides of the trade, and it's the reason to take massive action, because when that time comes, the time of when we least expect it, we will triumph because we will be ready to adapt. Yes, the dynamics of growth and change are all about being able to adapt, and that is how you and I, that is how we become all that we can be. So let's go check out these markets here. Let's go see what they have become. quite frankly, not a lot changed here from 9 o'clock yesterday morning. I wish I could say that it was a different picture out here, but really, right now, the ES Mini is traded at $16.85. We're coming into the 9 o'clock session yesterday, we had the ES Mini at $16.87.75. There has been some movement. We'll take a look at what all that movement has meant, where we're at in the markets. You've got the Dow futures are off about 11 points right now. No big deal. Very flat market out here. With the exception of the currency market, we've seen quite a bit of movement here. King dollar up 30 ticks, and gold is only back $1. Not too bad. Silver's actually up 3 pennies right now, so a flat market in the metals area. You've got light sweet crude is up 41 cents. That's at trading at 103.48. If we take a quick peek here around the world right now, you've got the DAX over in Germany's off 27 points. The FTSE is up 52 points. Over in Asia last night, the Nikkei was down 1.5%, off 201 points. The Hang Seng off about 0.3%, down 70 points. And the Shanghai relatively unchanged, up 4 points. Our call-in number, and you know it, it's 877-927-6648. You can give us a call. We can take a look at your stock. We take a look at a currency pair, whatever it is that you'd like. Give me a call. Be happy to look at it with you. So, let's start off. Let's start off with the NASDAQ futures here. NASDAQ futures, now we've been taking a look at a couple of different consolidation ranges that have been out there. Consolidation ranges really being beautiful patterns to be able to trade either to an upside or a downside. You know, when you least expect it. Well, this is the coolest pattern out here, because even though you might think it's going to break one way, if it breaks the other, you just go ahead and you take that trade. Why? Because when a consolidation pattern gets broken, what's going to happen is it's usually going to make a move to at least equal to or greater than the actual consolidation range. Now, what you have to prepare yourself for is that when a consolidation area gets broken, oftentimes, the majority of the times, price is going to come back and test that consolidation to make a determination as to whether or not it was a false breakout, whether it's to the downside or to the upside. In the case of the NASDAQ futures, you know, for the last several days, we've identified this pattern because they just simply stick out, and you can't not pay attention to them. In the case of the NASDAQ futures, we're looking at a 30-point move. That meant that the futures, once they broke to one side or the other, we were either looking at a move to 3,000 or to 30.90, because the range was basically 30.30 to 30.60 out there. In fact, the NASDAQ futures broke through that level back here on the candle at 2 o'clock in the afternoon on July 26th. And yes, they came back and they tested that area back at about 12:30 on July 29th. They tested it, they rejected it, and what did they do yesterday? They completed their move up. 30.90 was the target. The actual high that it got to was 30.94.75 coming into that 12 o'clock session. Now, what's interesting, for those of you that were in the den, you know that I went ahead and posted a little note there, said the move to the upside in the NASDAQ futures is over. And what did the market do once the NASDAQ made its move? Well, if we go take a look at the ES Mini out here, we'll take a look at coming into that 12 o'clock time frame. See where it was. Actually, the ES Mini here at 10 o'clock made its high yesterday. That was coming into the top of that consolidation range. In fact, for everybody that was listening on the radio, I know I specifically said now would be a good time to short if you were going to short the market. Why? Because you were up at the top of that consolidation range. And in fact, what it did was it moved down after the NASDAQ. I mean, it moved down with some conviction after the NASDAQ went ahead and made its move out there. Now, I wasn't really sure how things were going to really play out, because we were taking a look at the NASDAQ futures. We knew that they had the pattern that said that they wanted to go complete it. And did that mean that the ES Mini was going to go ahead and bust out of its consolidation range? Well, it most certainly did not. It made its high at that 10 o'clock session, and then it went ahead and moved down to where? Moved down to where it logically should move down. So if you are trading intraday, it doesn't matter whether it's intraday or daily or weekly or monthly, what you want to do is you want to take a look. In fact, you want to take a look at the patterns on the intraday charts to just simply prepare yourself for the larger charts, because they just simply, the patterns here are going to complete more often, but what you're going to see is you're going to see how these complete. You're going to see what a 100% move of a move is much more often. In the case here of the ES Mini, when it was pulling back, and it was pulling back with some conviction, no question about it. If you take a look at that little wide-ranging bar here at 1:30 in the afternoon yesterday, and if you are watching us on Tiger TV, you can see those bars. If you're listening on your radio or your mobile device at TFNN.mobi, remember you can always get the live stream of the show on your smart device, whatever that might be. Just go to the homepage of TFNN.com. Over on the right-hand side, upper right-hand side, you'll see a box with some 3 little smartphones, pads, whatever they might be inside there. Click on that. The show will stream live. And, of course, you can get the replay of this on Channel 9. And you'll see that wide-ranging bar coming in at 130. That said, okay, this could move lower. But what really stopped it in its place? Well, from a relative strength index, you were getting down to the weak area or getting down towards that 30 level, and you were coming to the logical spot of support. And that was making a 100% move. That was coming right back to the wide-ranging bar, quite frankly, at 11:30 in the morning on July 29th on Friday out there. What else was it? Well, if you just took your retracement ruler and went from the low at 11 o'clock in the morning on July 26th, that price, 1670.50, all the way up to that high that came in yesterday at 10 o'clock in the morning, 1688.50. The exact 0.786 retracement, not that we are about exactness here, comes out to 1677.38. Well, that's not really a price that it's going to hit. It's either going to hit 1677.25 or 50. And what did it hit? 1677.25. Little doji candle. What did we have take place right after that? A little bullish engulfing candle. Of course, bullish engulfing candle couldn't create a bearish engulfing candle because you were already at the lows out there. All that could do with a red candle would just say the leaves were getting ready to fall off the tree, and maybe it was going to do an expansion. Maybe it was going to do a 0.786 retracement. But no, that's not what it was going to do. Gave you the bullish move out here. And what have we seen take place? What we've seen take place is another 100% move of the move as the ES Mini at 5 o'clock this morning got up to the top of that area. 1688 is really the top of the range. It got up to 1687.75. You think we can cut it just a little slack out there as it was making that 100% move? Most certainly we can. So where are we really right now inside the sideways consolidation range? We've had news out here already this morning. We have jobs, ADP jobs numbers were out. We've got the big jobs report that is going to be out here on Friday. As far as jobs, we did the private sector jobs surged in July to 200,000. That's not exactly a big surge out there, but I guess analyst expectations were about 180,000. So that piece of news is out of the way. Also, the U.S. economy, the GDP numbers coming in at about 1.7%. I believe the poll of all of the economists out there thought maybe it would come in at about 1.1. So the question is good news good news? Or is good news bad news? Or is bad news good news? Look, all we want to do is really pay attention to the charts, pay attention to the patterns that are out here, and that will just simply lead the way. You don't have to actually interpret the news. Let the market interpret the news for us. Let's understand what patterns are out there, and then we can forget about when you least expect it. Forget about the news, or just listen to it for a moment, then go watch the charts and go watch and see what happens. In this case here, it becomes pretty easy, because we've only got really one more piece of news out there, and we're not really sure if it's going to be any news. It's Uncle Ben as he gives his little press conference sometime around the 2:15 area. What we want to do, I won't be on the air with you, but you wanted to go ahead and take a look at the sideways consolidation range inside the ES Mini. If it breaks to the upside, you're looking at maybe an 11 to 16-point move to the upside. Likewise, if it breaks to the downside, it's the same move to the downside. If you're interested in selling the market, if it gives you a gift this morning and gets up to 1688, that would be the spot to do it. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Big movers in the pre-market here this morning. Questcor Pharmaceuticals, QCOR up about 15% right now. That's up $7, almost $8 here on revenues. Net sales up 74% to $196 million versus $112. So they're having a nice pop here this morning. Speaking of pop, of course, that's what we called it when we lived up in Michigan. I think everybody else calls it soda, but we call it pops. But SodaStream International, SODA, is a ticker symbol. They're up $6 this morning, up nearly 11% out there. SodaStream, let's see what their numbers, what they reported here. They had Q2 revenue up about 28.5% to $132 million from $103 million from the prior quarter out there. So they're having a nice little pop in the markets. To the, let's see what else we have. Mako Surgical, MAKO. That's up about 13% this morning, up $1.57. Last trade firing off at $14. They reported revenues of... Well, I actually don't see it here on my screen, so I'm not going to worry about what it is that they actually reported. To the downside, you've got Riverbed Technologies, RVBD is the ticker symbol. They closed at 17.53. Their last trade just fired off at 15.10 out there. Potash having another bad morning out here. Of course, a little bit of a rebound yesterday. POT is the ticker symbol. They closed at 31.63, just down 63 more cents here this morning. Let's go out to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. How you doing this morning?
Good. How you doing? I see days on Intel that were high volume days there. Is that bearish engulfing or is that bullish? Like I wanted to buy, they announced their dividend again, but is this the bearish candlesticks there? Bearish Harmony, they call it something, hawk candlestick.
Yeah, so if we take away, I don't know if the day is the day that you're looking at, is that July 25th?
Thursday and Friday. All of a sudden Friday it had 100 million shares. Yeah, Thursday and Friday.
Absolutely. Okay. So to answer your question, that's a bullish engulfing candle. And so if we... Yeah, absolutely. So a bullish engulfing candle is going to take place after a decline. So the market has to be moving lower. And so as the market's moving lower, you're looking for market signals of when the bulls are stepping in to defend their position. So a bearish...
End of the month buying? Is it end of the month buying? Or could this be end of the month buying?
No idea. But here's what it was doing, Victor, just so you kind of get a better feel for it. You know, and candlesticks are really helpful to understand where you have lines of support or resistance, because really it's a battle that's going on inside the stock chart. And you had a hammer candle that took place, Victor, as it was moving down into July 10th out there. Had 50 million shares. The low of that hammer was 23.30. Now, that's probably one of the strongest reversal candles that you can have, because what's occurred during the day or during that session is that the bears really had control, and they lost control by the end of the session. They tell you that that's really it's a real strong, or should be a real strong, support area. And in the case of Intel, it actually proved that point. Now, volume coming down into that was 28 million and 33 million on the trading sessions of July 24th and July 23rd out there. So that was first going into 50 million shares, not enough to bust it down. And then what you got was a little doji candle on July 24th. So making the bullish engulfing, and all the bullish engulfing has to do is the candle, the body of the candle, needs to engulf the prior session. Well, when you have a doji candle, engulfing that is a fairly simple thing. What you like to see is some additional follow-through, and that's what, in fact, you saw on that next trading session on July 26th. Regardless of why it was there, just simply what you need to know is it is there. Now, if you were inside the Intel trade, you would want to close that trade out if you got to close below that hammer candle, 2264, because for whatever reason it will mean that the bulls have retreated, and then the next level down is what you've got to take a look at. Now, in the case of the stock chart here, because it formed a
going back up to July 17th, you know that. It's only filling all that when the earnings came out. It's going back up to where the earnings day is, a big long candle.
Hey, I'm not telling you to take a bullish position on this at all.
No, I want to take a bullish position. What do you think, though? Do you think they're dumping it or buying it?
Well, here's the problem. So we've been able to identify. We got to identify both sides of the trade. So we've identified where the bulls are hanging out. The problem that you've got is the bears are hanging out on July 18th. So July 17th, July 18th. So your reward to risk really isn't there. You had decent volume on the way down. You've got that gap. It hasn't been tested. So the first area to identify where the bears are hanging out is going to be at the price of 23.61. If price can get through that level, then the next area is going to be the bottom of that July 17th candle at 24.04. So right now I think we know where the bulls are hanging out, but we also know where the bears are, and that range is so tight that in order for you to take even try to take a bullish position, your spot to have taken it was on July 24th out there, July 25th, when you got that bullish engulfing candle. But I just don't think the reward to risk is there for you to take this trade here just yet. That's my call, Victor. All righty? Okay, you bet. 877-927-6648. When we get back, we'll go see how this market's going to pop or drop or what it's going to do. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 55 points, trading out at 15,576. S&P up 6 at 1692. Composite up 16 at 3633. Russell 2000 up 3.5 at 1047. Google up $3. Apple up 3.50. Microsoft up 6 ticks. Intel up 2 pennies. Cisco up 12. To the upside, MasterCard leading the charge cards as well. Up 3.5%. That's up $20, trading out at $6.21. Questcor Pharmaceuticals behind them by a couple of lengths here, only up $8 and change, but percentage-wise, up 17%. SodaStream up 11%. That's up $6 and change. Anheuser-Busch, this bud's for you. They're up about 7% this morning, up $6. Oil States International, OIS, is the ticker symbol, up 6% as well, up $5.83. Hanesbrand, I know all these were out with numbers here. HBI is the ticker symbol. They're up about 8% here, up $4.56. You've got Cubist Pharmaceuticals up 7%. That's up $4. Synchronosis, something like that. How about SNCR? I remember looking at that stock a while ago. Maybe we'll take a look at it. It's up 13% this morning. That's up $4. You've got SM Energy up $3.29. BRE Properties up 6% this morning. Air Product Chemicals up 3%. Visa maybe following the lead of MasterCard up $3. To the downside, You've got Regal Beloit off 8%. That's off $5 and change. Big 5 Sporting Goods down 13%. That's off $3. Jive Software is jiving to the downside, down 19% this morning, off $3. Amgen, AMGN, off 2.5%. Riverbed Technology down 14% right now, off $2.55. Nuvasiv, NUVA, off 10% this morning. Agrium off a couple of bucks. Mosaic down a couple of bucks, down 5%. Ignite Restaurant Group, apparently it's on fire, and it's having a little fire sale, down 13% this morning, off $2.33. Last trade firing off at $16. Potash down another 4% this morning. Trimass Corp off 3%, and Intrepid Group, boy, that whole group is really still struggling out here, off large. 877-927-6648. Give us a call, folks. We can go take a look at your stock. Let's start off taking a look at MasterCard, new all-time highs. Let's put this on a longer-term chart out here. Gapping up this morning, has some pretty decent volume behind it. So far, in just 7 minutes of trading, it's got 167,000 shares behind it at a $621 stock. Not too shabby out here. This thing, where is it going? Just to the moon, Alice. Now, this is an IPO. This one, you like to take a look at. This thing here IPO'd back in May of 2006 out at $40.20. That is a nice hit out here, trading out at $6.21. Basically, everybody in this equity is in a profitable position. You certainly like to see that. How much further can it go? Great question out here. Yeah, I'm done drawing A to B equals CD on this, because they really are, they just really don't help you out here. If we take a look at, let's see if it's overbought, oversold. This is a weekly chart that we're taking a look at, and yeah, it's in the extreme overbought territory, but it's got a lot of relative strength. This could most certainly continue higher out here. This is a MasterCard, so no reason for me to give you a price projection on this, because I don't have a clue chart-wise as to what it wants to do. Let's take a look. Questcor Pharmaceuticals, we mentioned they were also popping out here. QCOR is their ticker symbol. They're up nicely here this morning. This looks like the second most recent gap. Let's pull this back. Yeah, so this had a gap up, a nice sign of strength. Wide price spread, accelerated volume on June the 11th, 16 million shares to the upside. This morning so far has done 1.3 million shares. Let's pull this back. This is up over its swing point high from July 9th, 2012. Let's go ahead and put this on a little longer term chart. Let's put it on a weekly. And so it is now taking out a swing point. On the weekly chart, that's got volume of 50 million shares. It's going to be short of that, but it is taking that level out, unless it can get a significant volume going in it over the course of the next couple of days out here. But, boy, that's some big volume that it would actually have to make up. Nonetheless, could be an A to B equals CD up, but, boy, you got to be careful on this stock here. Look at this high-volume weekly bar here on September 21st. Now, maybe that area will hold as support. You would hope that it would hold as support if you were inside this equity, which is 52.63 out here. Of course, if it gets over the July 13th swing point for the week, 58.91, maybe that area will hold as support. That is on Questcor Pharmaceuticals out there. Let's see, what else do we have? We have Mako, not the Beep Beep MCO, or at Mako, the folks where you take your car to get it painted, but Mako Surgical out here, gapping up this morning and getting above the 200-period exponential moving average. It hasn't been above that since it fell off the planet here, and it fell off the planet on May the 8th when it moved down with 13 million shares, moved down with some big volume, had another big downdraft session here back on July 10th as it moved down with 21 million shares. So far this morning here, volume to the upside, 940,000 shares. Where is this headed to? Well, it's an excellent question out here. What it is doing is taking out a B point with volume. That's 699,000 shares. That is July 18th. So if we go take a look at that, A to B equals CD. This is on Mako Surgical out here. Let's take a look at it. You would say that your A to B equals CD on this. Your 1-to-1 will take you to 1563. 1-to-1 point 272, 1659. I would say 1659 is more likely where this is headed, but it could easily head back to the top of the, to the center of the gap, to the last time that price was inside that gap, that big gap down that had the 21 million shares on July 10th, and that is the swing point high, which is this little candle session from September 20th, which is at a price of 1962. It's at 1416 right now, so that could be the move that it is headed for, and that is on Mako, MAKO. Let's go take a look at a couple of these stocks here that are actually. I want to go take a look at that Synchronous or whatever the name of it is, just simply because I haven't looked at that for a long time now. I know they had something to do with Apple out here. Maybe it was just simply. I don't remember. Well, actually, let's go find out what in the heck they actually do. Why am I even not spending any time trying to figure that out? Give me a moment here. Let's put that up here. Let's see what their company profile says. So, I need to widen something here for a bit. So, Synchronous. We'll just call them. They provide software-based activation and personal cloud solutions for connected devices. I believe that Apple is one of their. Maybe I'm even wrong on that. So let's just take a look at the stock chart. Forget about all that jabber. It's up with some decent volume here this morning, gapping up. Volume behind the move so far is 162,000 shares. Had a nice sign of strength. Came back and tested the area. Never got down to the bottom of the test, which would have been February 7th. But on February 8th, wide price spread. Accelerated volume, 1.4 million shares to the upside as it came back and it tested that area. It was testing it back on April 19th, got down to a low of 25.63. You would have preferred to have seen it get down to 24.75, but it did not do this. Had a little bit of a sign of weakness out here, but it's just simply shaking that off, and that was on July 9th. So let's go pull this back. What a wacky stock this is. A lot of gaps down and up inside this equity right now. Let's put this on a longer-term chart. Let's put it on a weekly. It looks like a consolidation range that this thing has been traveling in for quite some time, and most certainly it is. So it's coming up towards the top of its consolidation. Let's go ahead. We'll put a black line. As soon as I can grab the line tool, we'll put a black line across the top of it. So here's the black line of the consolidation. It's got a bit of a ways to go before it can get up in there. And here is the bottom of the consolidation. So the consolidation range on this is $16.89. We'll call it $17, and the top is going to be 36. So we'll go from 36 to 17. That would give you what, a 17. Did I say 36? So it'd be about a 19-point consolidation move. Eventually, I'll get the math right here. So let's just go mark that in, a 19-point consolidation. And these are, I would write this down. In fact, I'm going to. Well, I'm doing it. I would suggest that you write it down, too. Why? Because if this thing does break the consolidation area, you're looking at a 19-point move out there. That would be nice. 19 points on top of 35. That'll take you to, about 55, 54. That'll take you all the way back to the October 12th, 2007 swing point. I'm not saying that's what it's going to do, but it has been traveling in a nice consolidation range ever since February of 2010. It's up towards the upper part of its range, so I wouldn't be looking at buying this unless it actually broke that consolidation level. Could you take it as a short position to the downside? Yeah, you could, but you want to really be paying attention to the volume patterns out here as it tests that consolidation level. Let's go take a look at the RBC. Regal Beloit, they're down about 6.5%. So they're the leader dollar-wise to the downside. Let's go see what is behind this move out here. Gapping down this morning, but off of its session lows out here. This thing had completed at 1 to 1.2728 to be equals CD down. Let me just update this chart here, put a couple of other tools on it, see what it is attempting to do out here. Regal Beloit has this nice high volume bar that it has not tested at the low, which was its last breakdown area prior to today, I should say. And that was with May 1st, 2013, 2.7 million shares to the downside. The bottom of 62.09 has not been tested, will be tested out here. That may not be the end of the test. Volume so far to the downside on this is 407,000 shares. So that's pretty darn good volume for 15 minutes of trading. That's actually better volume than that 2.7 million. So we'll see if in Regal Beloit, if that is in fact the end of it. I'm just looking here for, excuse me there. Let me see, I put this on a weekly chart, see what this thing has. So it's a high volume weekly low as well. And if it busts through that area, the next area, well, let's see, this thing is being held in place. I would say the next area, the next low on this would make and find some support. It's probably 55.84. It's at 66.27 right now as we speak. So let's go back. Let's take a look at the ES Mini 30-minute chart out here because when we came on the show, I was suggesting 1688 might be a good place to go short, and 1688.25 is what we hit during this session out here. So we're taking a look at the sideways consolidation range inside the ES Mini. It hit the top of that range. That means that in my system, it triggered. How about that? It triggered a short. Yeah, okay, so I'm in that position, so we are all set there. Just wanted to make sure. And so I just simply put on a short. Of course, I did it earlier this morning. It said 1688. Go ahead and put me on the short side. Let this thing prove itself. It wants to break the consolidation. I'm happy to take the trade to the upside. If not, right now what I'm looking for is, in fact, my exit on this is right around, it's above 1677 and a quarter, just simply to go ahead and take the scalp on this trade out here. I don't expect we'll see tons of movement in the market, maybe a little back and forth here as we come into Uncle Ben's press conference out here. But for me, it's kind of an easy trade because your back's up against the wall. That's really where you want to be, and if I'm wrong, it's okay. I don't mind taking the other side of the trade out here. So that is on the ES Mini. On the 30-minute chart, it hit that 1688 area, and then we'll just let it play out and see what it does. Now, let's go take a look at things that are also moving in the markets here. We've got currency pairs. We have King Dollar. That's on the rise. That's up about 30 cents right now, trading out around 82 and a quarter. Let's go take a look at the King here, the U.S. dollar index. Has some nice price spread and some decent volume behind it, 22,000 contracts. Yesterday was 34,000 contracts. It really needs to clear this bar here, this July 25th bar, in order to make me a believer that it wants to move higher. And that price point, the high of that bar would be 82.50 out here. Let's go take a look at the Queen. Let's go see what the Queen Bee is doing. That is the Euro U.S. dollar. And the Euro U.S. dollar here has been taking a break right at that 0.786 retracement level. It has had, I'm going to blow this up on the screen here. You can see 1, 2, 3 very small-bodied candies. Two candies. How about the candles? Two of the last three have been dojis out there. Right now we're having, so the first doji that took place was July 26, had a bearish engulfing candle. Of course, that was a simple thing to do, like we were talking about with Victor. When you have doji candles and they become bearish engulfings, you got to be somewhat careful out here. In fact, what you want to do is look to the next candle. In this case here would be the candle to the left, and that's that wide-ranging bar here on July 25th. I won't be a believer that the euro is ready to move down further until it clears at least the body of that candle, which is 131.99, preferably close below the actual extreme emotion of that day, which was the low of 1.3164 out here. But so far, what those dojis are telling us, those dojis in the window here, if you're watching us on TigerTV, what that is telling us is that the market is tired as it has gotten up to that 0.786 retracement level. And now we're seeing a second, in essence, bearish engulfing candle in a row, leaves falling off of the tree out here. All it needs to do is now clear that candle from July 25th to the downside, and then that would be a place where you'd say, okay, time to go short, in my opinion. The reason why is because until you clear the body of this candle, you know what, making 100% move of a move is also not out of the question here, and that is up at 1.3415 out in the marketplace. So I would imagine by about the 3:30 we'll know what the actual move here is in the euro U.S. dollar. Right now we've got the Dow's up 51 points, S&P is up 6, and we will be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 45 points right now. S&P is up 5. We've got gold back $8, trading out at $13.15. Silver off 9 pennies right now. And in the currency market, we were taking a look at the euro. U.S. dollar currency pair earlier. The best pattern that I see out here right now inside the currency market is really the U.S. dollar Japanese yen, and it's got just beautiful Fibonacci numbers, a nice little Gartley buy pattern that could complete at about the price level of 96.73, 96.74 out there. That would form a 1.618 expansion. I'll blow this up on my screen here for you. If you're following along on Tiger TV, your A point, your retracement point, your move is coming off of the June 13th low out at 93.77. And if you go from that low all the way to the high that came out here at July 8th. July 8th, that high was 101.52. Right in that range of 96.73 is your 0.618 retracement. It also happens to be a 1.618 expansion of your B to C swing point. That would be the level of July 11th, the low there, 98.23. All the way up to the high that was put in on July 19th. That was 100.85. Has not gotten down there yet. Price traveling below the 0.382 retracement. That says that this pattern still has the opportunity to hit. Now, just because it's a pattern that, what's beautiful about the Fibonacci numbers, the A to B equals CD patterns, the Gartley buy, Gartley sells, they're leading indicators. It means way ahead of time you can go to a stock chart and you can draw the pattern that you're looking for. Now, that doesn't mean, some people trade it this way. They've got a trade on right now. If it's 96.73, they're going to go ahead and fire away. I have determined that that's not the best way to trade the pattern out there, that you want to wait, in this case here with the market that would be pulling back, for at least the bulls to give you some type of signal that the time would be to step in. And the reason is, on this pattern here specifically, this could actually be setting up the next larger A to B equals CD up. So your D point, the 96.65 level, actually could become the C point of your A to B equals CD up. We'll pay attention to this. We'll watch this, but that looks like a nice potential trade out there. If this fails, then that says that the U.S. dollar, Japanese yen currency pair will move down to about 95.43 out there. But that is one of the best looking patterns that I have at the moment inside the well, there's another pattern out here, and that's called the Euro Japanese yen. That has formed a nice little Gartley sell. Price has moved back into the 0.382, the dead cat bounce area, coming off of the lows from June 13th all the way up to the high that was put in on July 24th out here. So it's just kind of hovering around the 0.382 level. No bulls here having shown up in the market. That says that it wants to move down to 127.92 as its next area, and this may be forming an A to B equals CD down, which I suspect is what it is doing. But suspecting and the way that it'll actually play out, we'll know if it comes into the 127 area with some wide-ranging bars, 126 with a wide-ranging bar. That, in fact, is what it will be doing, is setting up that move down. Of course, this morning here getting pounded is the Great British Pound. The Great British Pound here is weakening. We can see this right now. This has got a wide-ranging bar here this morning, sliced right through that Kerrygold butter at the 151.9 level. It's on its way to 1.505, probably all the way down to the bottom to test out the old hammer candle, which acted as a support level, which is back on March the 12th. That price point is 1.483. It is Wonderful Wednesday, folks. If you're off to start your day, make sure that you have a great one. And if you now, what I want you to remember is this. I really want you to remember, and that is that you have an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.